Hey everybody, how's it going? It's Russell Matthews here, and if you've been watching the news or you've been following along on this YouTube channel, you'll know just how much talk there's been about the CRB and the CERB and how much tax Canadians are going to owe come tax time this year and how big of a shock it could be for many Canadians. Even in a typical year, tax time is not the most fun for most Canadians, as more and more people are having to pay hundreds of dollars, if not thousands of dollars, back to the government in taxes that they owe. And now, since the start of the pandemic, hundreds of thousands of Canadians have all received benefits from the government, and all of this is additionally taxable as well. But what if I told you there was a way that you could potentially avoid paying taxes on all of these benefits, and it's totally legal, you're not going to end up in prison? Well, that's exactly what we're going to talk about today. 5 ways that you can avoid paying taxes on the benefits that you've received, and when they're all mixed together, it could save you thousands of dollars and completely eliminate the taxes that you would have to pay, if not greatly reduce them. And it all comes at the low cost of hitting that subscribe button, notification bell, the like button, all of that good stuff. If you find any value throughout it, hit those buttons. I'd really appreciate it. Thanks so much for doing that. Now let's get into these tips. First off, I have to say that the intent of this video is just to give you a starting point on what options could be available to you that you're going to plan to do your own research on. I'm not a licensed or certified professional accountant, and I always recommend talking to one of those because everyone's individual situation is a little bit different, and some of the information I give you here could either work better for you or worse for you depending on your situation. So this video should be used for entertainment purposes only, and as a general word of advice, you should never really take everything at face value from somebody you hear on the internet. Chances are I haven't met you in person, and while I try to bring you as much positive and helpful information as possible, you can never fully trust anyone that you hear from on the internet, so do your own research on this sort of stuff. Anyways, as a quick refresher, all of the benefits that you've received over the past while, that will be lumped into your income for this year. And the way that you're taxed is that you're taxed on your income. Now, depending on how much money you've made this year with those benefits added in, you'll have to pay a different tax rate. If you want to know how to calculate exactly what amount of tax you'll have to pay, check out the video. That's the first link in the description, and you can go calculate to a pretty good degree of accuracy how much you're going to have to pay at tax time. But the whole goal of what we're doing in this video is trying to find either tax write-offs or tax deductions that you can use to lower the overall income that you're showing on your tax return and as a result pay less taxes. The first and likely largest tax credit that you're going to be able to use to lower that income and pay less tax is called the basic personal amount. The basic personal amount is an amount of money that every single Canadian across the country can deduct from their income each and every single year. And it's designed as a sort of way that people who are making under a certain amount won't have to pay anything on their taxes because that basic personal amount will be able to be deducted from their income so that they don't have to pay any tax. But even if you make above or well above the basic personal amount, everybody can use it to lower their income. So you're going to want to use this every year if you haven't already used it in the past. The number that you're able to use for this basic personal amount has been increasing over the past years, but for 2020, the number that you'll be able to use is $13,229. Now, as a reminder, that's not $13,229 in tax savings right off the bat. What that actually does is just lowers your income that you're showing on your taxes, so the tax rate that you apply to your income will result in a lower number at the end of the calculation because your income is lower by that $13,229. The second way you can reduce your tax that you're going to be paying on the benefits you've received is more related to COVID than you might think. More and more people have been working from home, and if you've been using some space in your house as your home office or have been doing the majority of your business from home, you could be able to write off some of your housing expenses. This is a tax write-off that I use personally. If you don't already know, I work in the real estate sales industry in the Greater Toronto area. By the way, if you're looking to buy a place, feel free to shoot me a message. But anyways, since COVID started, I've been doing a lot more work from home in this home office. And I've been doing Zoom calls and I've been using my computer here in the office, and a large portion of my business has moved online. As a result, I could be able to write off some of the expenses associated with this portion of my house. There are a variety of different things that you could be paying for, that you could be adding up the total of in order to reduce your overall income that you're showing on your taxes to save a whole bunch of money. This includes things like the electricity costs you could be paying, the heating costs, the maintenance to upkeep the room, the property taxes, and even the insurance on your home. Also, if you're renting your home or you're renting an apartment, you can take a portion of your rent and use that in this total sum that you're going to be able to reduce your income by. But with that being said, you can't take the entirety of those costs. What you have to do is you have to figure out what portion of your living space your home office takes up. So let's say in my house that this office is 1 room out of 10, just for simplicity of math. That would make this 1/10 or 10% of those costs. So you would have to take those costs and divide them by 10 to get to that 10%, and that amount is what you can include in your deduction or your lowering of the income that you show, and as a result, reduction of the taxes you pay. The third thing that you can deduct from your income is for those of you out there who have a child, because you can actually deduct some of your childcare expenses to lower that income and lower your taxes. If you'll remember earlier this week, I posted a video about how there are many childcare benefits that will actually give you money directly to your account, and those are different from these tax benefits. So if you want to find out more about those, you're going to want to go down there. It should be the second link in the description, and you can click right there and find out how you can apply for benefits that will give you money directly. But for this, we're talking about how you can write this off on your taxes. Now, if you have a child and you have to pay for any childcare expenses, you can include that. So that's going to be for any program that could be like a nursery school or an after-school program or a daycare. You can include these expenses and reduce your income with them to pay less taxes, and as a result, pay less taxes on these benefits that you've received. This could be a huge deal for many parents out there, because while many Canadian schools are back in the classrooms, there are many parents who have resorted to online learning either for personal reasons or because the school board has been forced to shut down because of an increased reporting of COVID cases. Now, if that's your situation, it's likely you've had to pay for additional childcare to support your family as you've had to keep on working while the kids are at home. Number 4 is one that a lot of people I find will end up missing, and this is that you can actually deduct the expenses when you move houses or when you move places that you live. But in order to do this, there has to be a reason for the move that falls into one of 2 categories. Number 1, you have to be moving for work, to change employers, or even to start your own business in that area. And number 2 is you could be moving to go to school or study in some program. These are the 2 situations where you can claim these moving expenses. This is a tip that I give to a lot of the people that I work with in my day-to-day, whether they are buying a house or moving from one rental unit to another. It's incredible how many of these moving expenses you can claim if you fall into one of these 2 categories that we just talked about. You can write off practically everything for this. That goes for people who you pay to come in and pack your place up, maybe movers, like if you hire a moving company, even the gas in your car that it takes for you to drive from one place to another. Additionally, if you were moving and say the place you were moving into wasn't ready for you to go into yet and you had to either stay at an Airbnb or at a hotel, all of these costs and the meals that you eat while you're in this temporary living situation can be deducted from your income, and as a result can be lowering your taxes on every single purchase. The 5th way that you can drastically decrease the amount of money you're going to have to pay back at tax time is by opening a special kind of either bank account, savings account, or an investment account called an RRSP. Now, if you're not familiar with that, that stands for Registered Retirement Savings Plan. You can think of this as a magical sort of account where you can take any income that you make and put it into the account and poof, it disappears in the eyes of the CRA. But there is a limit to how much money you can put into this account each and every year, and that's largely dependent on how much money you've made in the past. If you want to find out what your individual RRSP deposit maximum is, you can log into your CRA account, which you'd be familiar with if you've applied for any of these benefits, and you can scroll down and it will show you how much room you have left to deposit into RRSP accounts for your given situation. The overall idea for this account is that when you're making money, you can put money into this account and have it not show as your income for that year. The idea is that later on, when you're retired or you're making significantly less income, you can then withdraw this money and pay less tax on it than you would if you paid tax in the first place when you were making more money. You'll remember that the more money you make, the more taxes you pay, and the less money you make, the lower a tax rate you pay. So if you're making a lot of money now, or you're making more money now than you would expect to in the future when you're retired, it can make sense to put money into this account and be taxed on it later when you may not be in as high a tax bracket. One of the nice things about this RRSP is that when you open the account, it doesn't just have to be a savings account. You can actually open an RRSP that is a self-directed investment account, and instead of just leaving it in a savings account that could be earning you not so much interest, you could be throwing this money into the stock market or into any number of investments that you can purchase through these online brokerages. That sounds like a topic for another video, but I just wanted to make you aware that this is one of the large benefits that you can use if you're using an RRSP. Now, of course, I recognize that given the current economic situation, so many people are having to really struggle to make ends meet, and as a result, you likely won't have a ton of money to put into an RRSP that you just won't touch until you're retired, right? And I get that 100%, but if you do end up with any sort of surplus or making a little bit more money than you would have expected, this is a great strategy that you can use to reduce the amount of taxes you're going to owe come April 30th, 2021. But I have to admit, usually when I talk to people about taxes and tax savings and tax efficiency, their eyes automatically glaze over and they're not interested in hearing what I have to say. But that's because they don't understand how big a deal this can be for their futures. And this is why I get so pumped and excited talking about it. Right now, more than ever, the old saying rings true: a dollar saved is a dollar earned. So if you can save money and not have to pay these taxes back through entirely legal methods that you're entitled to use, then why not do it? This money that you're saving could have a huge impact when it comes to the wealth that you're able to build for you and your family's future. Imagine if you used these savings to open up your first investment account, or to finally create that emergency fund that I always talk about here on the channel that can give you a lot more options in terms of your future. I mean, that's what this channel is all about, right? Bringing these strategies and these tips and melding them all together to give you the best chance to build wealth for you and your family. And again, I'll say it once more, if any of these strategies seemed interesting to you, use this video as a starting point to do more research and maybe talk to a CPA or a certified professional accountant. That's my #1 recommendation if you really want to talk about what you can do to save taxes come tax time. Whether you think it's fair or not, Canadians are going to be paying a lot more come tax time this year, and a lot of people haven't been planning for that because they've just been using the money that they've been given from these benefits, whether it be the CERB, the CRB, the CRSP, or the CRCB. All of these benefits are taxable. But if you found any value in this video at all, and you can think of somebody who could benefit from saving a couple $1,000s, then you're going to want to hit that share button and send this video their way. It could be a huge help to them and their financial future. And of course, if you haven't already, do all that good stuff down there. Hit the like button, the subscribe button, the notification bell. I'm coming out with updates about these sorts of topics all the time that could really help you out down the line. And with all of that said, thank you so much for watching, everybody. I hope this has helped you out. I know that I'm going to be using some of these strategies, and I'll see you next time.